Hello traders. So it has been 6 weeks since the correction started, close to 25,640, 650. And after 6 weeks correction, Nifty has been able to correct by 5%. Before going ahead with the levels, with the state of trend and everything, I would just like to say one thing, that in a market where market has shot up by close to 12% in a matter of 1.5 months, especially Nifty, which happens very rarely, I think a 5% correction is all right. This is what I told last time, and this is what I will repeat again. Because if you talk in terms of retracement from year to year, I think we are close to the 38.20% Fibonacci retracement. This is fine. Yes, as a trader, you might not like stock market indices and stocks to dip down, but that is how the nature of market is. Now, going ahead forward, this is a 5% correction in Nifty spot. All right, I'll just like to remove this particular thing. Now, if you check in terms of trend, the trend is fairly down in the weekly time frame chart. The momentum is also down. Quickly, I'll just like to check the monthly time frame chart. The monthly time frame chart is still pretty strong, so that is a good sign. We are just in an uptrend, but we are consolidating. So the monthly time frame chart is still fine. Only the weekly has started looking slightly more weaker, and daily has been in a downtrend since many days. Now, this was an entrance, pretty much psychological level and a very, very interesting level, because many times the Nifty had been able to bounce back pretty sharply from here. Now, on this particular day, on Thursday, which was an expiry day, we saw a very, very sharp bounce back in Nifty spot. And frankly, it did look like maybe if we open gap up, or even if we sustain and cross these highs, then possibly it would be a good time to see some sort of relief rally or pullback or something like that. Because along with this particular big hammer, I would just like to enlarge this screen. There is one more formation over here. If you see this candle, it was able to engulf the next three candles within itself. So this was a pretty much good consolidation, and there were few decent hopes that if we start trading above 24,850 or something, then we could pull back higher. This did not happen, and the next day again, markets first in the initial part, they were red, and it did seem that close below this particular low would lead to lower levels. Then we had a pullback. Then again, we had some positive views coming up, and then again, we have a down day. So I think this is a lot of drama happening in Nifty and in the overall markets. A lot of mixed signals are coming. To the point, I would say, as a long only trader, I would suggest you not a very good time to pick stocks, and only start picking stocks on the upside when you have some really strong signals on the chart that the market is going to reverse from your any contrarian signal on the daily chart, which is accompanied by next 2 to 3 days of rally, would be probably a good time to start accepting that the markets can bottom out. Although the good part here is we are close to this 38.20% Fibonacci retracement, and yes, this is a good level as a support, because you can see over here that along with this Fibonacci retracement, we do have a gap over here. So now again, it will be left on the next week how markets pan out in this particular gap. Only time can tell. Fine. Now, if you go to Banknifty, now there is something positive visible in Banknifty. I'll come to that point. Banknifty has also been able to crack by close to 4.73% from the recent highs. The trend in the Banknifty weekly time frame chart is flat. Momentum is down. In the monthly time frame chart, the trend is still up. The momentum is flattish in the monthly time frame chart. In the daily time frame chart also, we have a hammer which was formed on Friday, and then again we have a big red candle, which is a bearish engulfing sort of pattern, not exactly, but sort of a pattern. And we have broken below this low. Now things start getting interesting over here. I'll tell you why. See, understand one thing. Now pay attention to the levels over here. We do have a 127.20% Fibonacci extension in the Banknifty spot, which is at 54,469 or 54,470. Now these same levels are basically this particular support band, which is between 54,300 and 54,500. Now 30 points का जो level है वो मैं उसको इतना importance नहीं दूंगा. The reason because 30 points 54,000 के index में इतना कुछ meaningful चीज नहीं है. Now this particular band I have drawn over here because it is accompanied by a previous high, which is a very, very big high. Okay. So the 127.20% Fibonacci extension in the daily chart is at the same level where which we have a previous Banknifty high. As soon as if at all we crack this and we go a bit lower, which is at 53,950, 957, then we do have this next Banknifty high. Okay. And if we look at this and this, these two highs and this band, so we can say that in coming next few days, if Banknifty corrects, if at all Banknifty starts correcting in the daily chart, and if we go down by another 500 points, then we will start seeing a lot of 400 to 500 points. We will see a very, very strong supports kicking in. Now, whether Banknifty will stop correcting here, whether it will bounce back, whether it will not just bounce back and take a U-turn and start a new uptrend, all that I'm not going to comment, because all that only and only time will tell and only price action will tell. But as a trader, I will surely keep my eyes open if at all Banknifty starts trading in this particular zone. Okay? All right. Going ahead in the private banking pack, the trend is down. In the weekly time frame chart, the momentum is fairly down. In the daily time frame chart, the trend is down, the momentum is clearly down, but you can see that it is well below the 30 level, which means in the private banking pack in the daily time frame chart, we are slightly bit oversold and we are near important supports. So also the distance between the price and moving averages is slightly higher. So that is what we need to understand. And once if we break this support, start trading below it, and if we test this support, which is at 26,028 or 26,020, again this is accompanied by a 50% retracement of this entire rally in the weekly time frame chart, and it is accompanied by a previous high. So yes, if private banking pack corrects from here, then probably we will start testing important support levels. Okay. PSU banking pack so far, I think they have outperformed the Banknifty. The reason for that is the private banking pack has corrected more with higher momentum. PSU banks, although they had negative divergences, they got saved and they did not even break this low. So I think till the time they don't break this low, I think things are still okay. But in the next week, we have to be a bit careful because a lot of consolidation has happened over here. Even if you go to the 2 hourly time frame charts, if at all you see the RSI moving like this and starts going down, then we will see some sort of sell-off happening. So I think keep your eyes open on the lower time frame charts. You will get your signals pretty early over there. Energy pack, the trend is down, momentum is down, but yes, we have tested some important support levels and they are also visible in the daily time frame chart. You can see that this is the 161.80% Fibonacci extension accompanied by a good hammer and a previous couple of tops. So we are trading near important psychological levels, support bands. What price action is visible from here will be important from this particular sector. Auto pack. Auto pack, yes, थोड़ा सा boring दिखेगा. It will look a bit range bound. It will look a bit choppy. But in terms of outperformance, yes, it has certainly outperformed the entire market, especially because it has fallen less. Understand one thing, outperformance does not just mean that how much higher a index has gone or how much faster a stock has moved, but rather than that, when markets are correcting and if the index has remained within a particular zone and it has not corrected, even that I would say is an outperformance. So far, I think the trend is still up in the weekly time frame charts. The trend is down in the daily time frame charts, okay? But the momentum over here in the weekly time frame chart is surely flattish. It is completely sideways. So there are a couple of high weighted stocks which are looking fine, which are looking bullish. But apart from that, you have to be a bit careful if you're trying to trade in this particular sector. Consumption pack again looks pretty much similar to the auto pack. It has outperformed. The momentum is flat. You can see the RSI is flattish. And you can see even over here the trend is up, but the movement has completely gone away. So again, as a trader, we will need a lot of momentum to make money, and which is absent over here. So as a trader, I would like to stay away from the sector. But yes, if markets revive, then one should surely keep your eyes open to sectors which have not corrected that much. Going ahead with finance pack. Finance pack has started correcting. The trend is still flat, not down. Momentum has shifted on the downside, and the trend is down on the daily time frame chart. Once we close below this particular low and sustain below it, then I think we will open the doors for the lower levels close to 25,790 or something like that. Okay. FMCG pack. FMCG pack, the trend is down in the daily time frame chart. The trend is also down in the weekly time frame chart. The momentum is flat in the weekly time frame chart. And as a trader, I would like to completely stay away because it is very difficult to make money in a sector which is extremely choppy. There has not been any sustained trend. Even if there is a downside sustained trend, as a derivatives trader, one can initiate possibly short positions, but even that is not visible because even if it goes down, it pulls back pretty quickly. So as a trader, I would like to completely stay away. IT pack. IT pack continues to remain the most weakish sector of the lot. The trend is down. Momentum is down. Now, what has happened over here? You need to understand. I'll just try to plot a couple of fibs over here for all of you. Now, the trend is down in the daily time frame chart on the left hand side. And if I convert this particular chart to a line chart, we can see a positive divergence, a triple positive divergence. This one is confirmed. The second one is not yet confirmed. So I think if we start seeing a pullback and if we break below this high of RSI, we could see some sort of short covering happening in the IT pack, which is probable. Although we should not forget that when the trend is extremely strong on the downside, such divergences can fail. Okay, such divergences can fail. Do not forget this. We are near important supports, this one, which is at 33,912, but this is more important, which is a weekly support. And so far, there is no positive candle visible in the weekly time frame chart, but in the daily time frame chart, we can see this particular pattern, which is a bullish pattern. All right. So as a trader, I would like to understand that if I'm holding bearish positions in the IT pack, I would like to keep my eyes open and I would like to trail my stop losses very aggressively in this particular sector on the short side. So if this sector starts pulling back, it might give a little bit help to Nifty to stay afloat. Metal pack, which was one of the stronger sectors, now has started looking weaker. The trend remains flattish, or it has started to looking weak. The momentum in the weekly time frame chart over here is started to looking weak. The daily time frame chart is already weak, but this formation in RSI is not that great. Generally, this formation happens when markets are very, very choppy. So I think if we want a clear trend on the downside, we will need to close below this 9,000 levels with a decent candle. Only then it will possibly confirm a downside. Infra pack. Infra pack, one of the strongest sectors, now it has started correcting on the downside. Trend is down, but we are near important supports. You can see that we are near this 38.20% Fibonacci retracement. And along with this retracement, we are also near this previous high. So these are interesting times, and in a sector where the rally has started from 7,600 and ended at 9,500, such a correction is acceptable. We are near important supports, and what formation happens over here will decide the trend of the next couple of days and even next 1 week, because this is a very, very strong, important support band. If market tries to pull back, one should always keep your eyes open on the infra pack. Pharma. Pharma, if you remember in my previous weekly sectoral analysis, I had told that this is one of the stronger sectors, but as a trader, you will have to be very, very careful which particular stock you will be buying. You will not be able to make money in this sector if you just buy haywire any particular stock. Just because the index was looking strong like this does not mean you can just keep your finger on any stock and you can start buying it. What happened was the highest weightage stock actually had its results and then it started correcting. So now I guess the trend is down in the pharma pack, momentum is down, and we are near important support levels. So from what happens over here will decide the course for future. PSE sector, again the trend is down in the weekly time frame chart. The momentum is down. All right. Even in the daily time frame chart, the trend is down, but I'm going to convert this particular candlestick chart into a line chart, and you can see that we do have a lower low in price and a higher low in RSI. Now, is this a positive divergence? The answer is no, but it is surely a sign that the momentum on the downside is getting slightly weaker, which is a good sign for bulls, although it is not a bottom out sign. So if at all market starts bouncing back sharply from here, it is not going to be a proof that we have bottomed out. So next few days price action and the action in RSI will decide the course for future. Okay, so we do have a very, very big hammer over here. We do have a decent hammer over here, but we do also have an inverted hammer. So signals are mixed, but we do have a positive divergence, which is also coming up at a decent support band, which is in the daily time frame chart, and the same support band is also a support in the weekly time frame chart. So these are interesting times, and if the market bounce back, I think one should keep your eyes open on the PSE sector. Realty pack, a very, very high momentum up move initially, and now it has also come down with a high momentum move on the downside. We are near 61.80% Fibonacci retracements. We have already closed below it. Yes, I can see that, but I think I will give it a day more for, just give it a cushion, because at times what happens is prices do close below the support, stay, and then they start pulling back up. So I would like to give up a little bit cushion, and we are still near important support levels. Let's wait for a day and then see what happens over here. Okay. But just because it has a support and I would like to, start buying here, that is not the way one should trade. See what happens, and then if you get a trade in your setup, only then jump in. Midcaps. Midcaps trend down in the weekly time frame chart. Trend is also down in the daily time frame charts. We are near important support levels. like this is one important support, and more than that, this is more important support because of this cluster. So yes, we have a little bit of movement still left on the downside. Let it get lighter, let it correct, let the profit booking get over, and if then it revives, only then it will be meaningful enough to jump in as a long only trader. So I think summing it up all, I would just would like to say that overall in a strong bullish move which started in the month of early April and which topped out at June. This is just a retracement, nothing more than that. Yes, we have already corrected 5%, I can understand, but a 5% correction is pretty normal in a bull run. But we should also understand that just by saying that we are in a bull run doesn't make sense that we should keep buying on dips. Yes, we are near important supports. Many of the sectors which I did share with all of you today are near important supports, but supports can be broken also. So until and unless the price does not bounce back from important supports, creates a good recovery, gives you a breakout in your trading setup, do not try to preempt it. Do not try to predict it. Do not try to preempt it. Try to react to the price formations. All right. This is the right way. This is not the right way. So stay mindful, trade less, keep your eyes open and trade wisely. Thank you.